Greetings. You made it. You made it through financial accounting. We did a pretty deep dive into financial statements, financial statement analysis, and the terminology that goes along with financial accounting. Now it's our chance to go into managerial accounting, which is the business internal accounting, as opposed to the outside public accounting that are served by public accountants, going into a business and doing audits, doing taxes, and doing other consulting type activities. So what we're going to do here is take a look at managerial accounting, and we'll first compare and contrast managerial to financial, and then we'll do that dive straight into managerial for the rest of the semester. So when we compare financial and managerial accounting, we have financial accounting more historical and managerial more current and future. So what is managerial accounting? Well, they're activities providing managers and other employees with information to assist in the management and the internal use to formulate and implement an organization's strategy and directions. So we're going to take a closer look and comparison between financial, which we've learned to include the four financial statements, the income statement, the balance sheet, statement of cash flows, and stockholders' equity. And we figured out how to produce them. We figured out the relationships, but this is all stuff in the past. Managerial accounting is geared towards decision-making, again, as I said before, for the present and the future. And it's a framework to organize and evaluate data. So let's look at direct comparison of financial and managerial. So first of all, who uses this stuff? Well, financial is used by internal users, but also external users, usually investors, sometimes banks. A lot of outside folks are very interested in our financials. And their general purpose, big picture financial reports covering a long period of time, typically. Long being a year, 2 years, sometimes a quarter, sometimes even 3 years plus. Managerial is almost exclusively internal users, members of the company that are trying to make decisions and guide direction for the business. So we're looking usually at ad hoc reports as needed, specialty reports. They could be weekly, they could be monthly, they could be every 3 days, or they could be as frequently as you desire them to make decisions. When we look at financial accounting, again, we're looking at highly aggregated, big picture, top level stuff of the bigger numbers of what we've done. We do cover longer time periods than managerial, but it is all historic. It's reporting on past decisions. Not always the best indicator for the future. Doesn't always cover the economic conditions that are present or activities that are happening outside the walls and in the current and in the future. Managerial accounting is reporting based on the needs and desires, and they're oriented toward current and future decisions. And then there are standards. We use GAAP, generally accepted accounting principles, to prepare our financial statements. It's a standard that everyone does learn who wants to read financials, and we can all understand the basis of GAAP. And the emphasis is objective data, measured in only financial terms. Follow the numbers, follow the money. Managerial accounting is not constrained by those external GAAP standards. As a matter of fact, the ad hoc reports can include whatever you want or not things that you don't want. It has not only financial, but also non-financial terms, objectives. They are objective and subjective as well. So it's not just the numbers that we're following, but there are other things and factors into that. There's a professional organization called the IMA, Institute of Management Accountants, and they sponsor a CMA exam. You've probably heard of the CPA by now, Certified Public Accountant. And on the bottom, you can see it's a 4-part exam, pretty intense. There's continuing professional education, CPE, here in South Carolina. That's about 40 hours a year. A code of ethics to adhere to. And then there's specific course requirements in addition to course hour requirements to get your CPA. And it's 128 credit hours as an undergrad to take the exam, but you need 150 credit hours, at least college credit hours, and they can be from anywhere. Tech schools, 2-year, 4-year, other courses, not just at one institution in your major, but those courses need to get covered and the credits need to be had, and they're not all business. That 150 can include languages, history, psychology, sociology, whatever one has an interest in, because they want well-rounded accountants. There are also experience requirements associated with the CPA. The CMA, on the other hand, is a 2-exam program. as opposed to 4 exam. About the same 50% pass rate, but the CMA does not have a degree requirement, which is interesting. So even someone who hasn't graduated college can get the CMA. It is a very well recognized standard of recognized certification. And there are ethical standards and ethical practices, as well as continuing education requirements. We also have CMA Scholars Program here at Francis Marion. If anybody's interested in pursuing the CMA, we have ways of getting the resources, the exams, testing materials at no charge to you as part of that. Usually for accounting, finance, and management types, those are the folks that would be most interested in doing something like that. So let's do a little deeper dive into managerial accounting and talk about 3 themes of strategic cost management. So when we're deciding about costs, and a lot of what we're doing is we're evaluating, and I'll mention it here, labor, materials, and overhead costs. We're trying to figure out how that balances. And when we can figure out what our costs are, we can actually come up with, hey, what do we have to sell this stuff for to make a profit, generate profits? And we'll talk about variable costs and fixed costs, and that factors heavily into our analysis. So if we're looking at the strategic cost management, the 3 elements, first is a strategic position analysis. Where the heck are we and how do we compete? And who and what are we competing against? What are we selling and what's our competition like? We have cost driver analysis. What are the factors that influence the costs of our items? And yeah, you'll say, well, raw materials, I got to buy stuff, and then I got to produce it and manufacture it, and then I got to package it, I got to ship it, I got to get it to the customer. Okay, all the cost drivers associated with that, which we'll do a deeper dive, are things we analyze and try to cost out what's going on, and then we try to make more efficiencies within those cost areas. And then we have the value chain. And the value chain is getting the raw materials in to the point the customer walks away, not just walks away, but buys our stuff and takes it with them and they consume it. So that value chain, what adds value? Some things add value. Okay, so we're making Pepsi or Coca-Cola. When we add high fructose corn syrup, or we add our orange juice to Mountain Dew, or the carbonated water, that's a value add. We got the bottles, the bottle caps, that's a value add. But if we're taste testing and quality control, that's not really a value add. We actually have a cost associated with that, and we need to do it. But do we add value in the chain? Yeah, the packaging adds value, but the actual quality control is not a specific value add. And we'll again talk more about the value chain and the things that are evaluated as part of that. So thank you for making it this far. We're looking to go deep into managerial accounting, which you will. And some people really like financial. They like the numbers. They like the analysis of the financial statements. Some people really like managerial because they say, well, that's where the decisions are made. And that's where we can execute the cost savings and make a difference. And some like both. And then there's one other option, which I won't mention, but we'll continue on in the next video. And I'll look forward to your participation. And again, glad to have you.